bank interest rates going down and some of the platforms raising their fees on cash management portfolios, you may now be wondering, where is the next best place to park your money? In that case, you can check out the UOBAM Invest Cash Plus Xtra Managed Portfolio, which is offering a rather high yield of up to 4.7% per annum as of 28 March 2024. And I've got to say, this is a rather interesting portfolio because on one hand, it is similar to a money market fund where it's giving you a daily return while having low risk and no lock-in period. And on the other hand, because it is a portfolio, it is designed to give stability and preservation during market downturns while having the flexibility to tilt towards higher yielding bonds and give capital gains during up markets. So in this video, I'll be sharing everything you need to know about the UOBAM Invest Cash Plus Xtra portfolio. What is it? What are its fees? Who is it suitable for? And if you do decide to use it, I will show you a quick step-by-step guide on how to invest your money into it. Full disclosure, while this video is sponsored by UOB Asset Management, rest assured that all the opinions here are entirely my own, and the whole reason I'm making this video is so that you can understand the portfolios a little better, yeah? Also, what I say here is definitely not financial advice, as you will need to take into account your own risk tolerance and financial situation, yeah? Alright, in order to understand how the Cash Plus Xtra portfolio works, you can first take a look at its underlying holdings. As of making this video on 25 April 2024, this portfolio consists of just two funds, 80% in United SGD Fund Class B and 20% in United SGD Money Market Fund Class B. Okay, I know both funds sound super similar, but their investment objectives are actually quite different. Let's start with the first fund, United SGD Fund Class B. This fund has an annual management fee of 0.33%. The objective of this fund is to give a higher yield as compared to Singapore dollar deposits, and they do it by investing in money market short-term interest-bearing debt instruments, as well as bank deposits with both financial institutions and governments across the world. As of April 2024, this fund has a weighted average yield to maturity of 4.44% and a weighted average maturity of 1.2 years. The investment strategy of this fund is rather interesting. So, because interest rates fluctuate all the time, this makes it difficult for traditional fixed income funds to deliver consistent returns. So, the fund attempts to overcome this issue by using a laddered investment strategy to invest in bonds with different maturity dates across a 3-year time frame. For example, when interest rates are going up, the proceeds from the bonds that mature first will get reinvested into newer and longer maturity bonds in order to lock in a higher interest rate. Then, when interest rates are expected to fall, like right now, they can also lock in bond yields at previously higher rates in order to continue earning higher yields. Since inception, the fund has given around 2.88% average return per annum, while managing to deliver higher returns as compared to its benchmark for most of the years. Plus, because of the fund's investment strategy, it has shown that it is less vulnerable to drawdowns during periods of market volatility. So far, the fund delivered positive returns in 22 out of 24 years since inception. And even when it had delivered negative returns, the biggest drawdown had been at most negative 2.6%, which was in 2022, which just shows how resilient this fund is. I guess that's probably why this fund has managed to win over 20 awards, including the Outstanding Achiever and Best in Class awards for Singapore Fixed Income at the Benchmark Fund of the Year Awards 2022 and 2023 respectively. Plus, what also helps is that their portfolio manager, Joyce Tan, is incredibly experienced, as she has over 25 years of investment experience and has also won multiple awards in the past. Anyway, angkat bolas aside, the next fund is the United SGD Money Market Fund Class B, which is also managed by the same award-winning team behind the United SGD Fund. This fund has an annual management fee of 0.15%. The objective of this fund is to provide a return which is comparable to that of Singapore dollar short-term deposits. While the previous fund invests mainly in institutional holdings, this fund invests mainly in Singapore government bonds such as MAS bills and Singapore T-bills. As of April 2024, this fund has a weighted average yield to maturity of 3.7% and has a weighted average maturity of just 0.15 years. Essentially, this fund gives you a convenient way to invest into the Singapore government bonds without having to lock up your money over a certain period. This makes it a good place to park your money in and potentially earn a return over the short term while you are waiting to use the money. Besides that, while the fund also invests in foreign currency securities to give higher yields, it also hedges against foreign currency exposure back to SGD in order to minimize any currency risk. And because of that, it has a rather consistent performance since inception. So those are the two funds in Cash Plus Xtra. In summary, the United SGD Fund aims to provide higher returns in both high interest rates and low interest rate environments, while the United SGD Money Market Fund aims to provide stability and consistent performance for the portfolio. As of 28 March 2024, this fund gave a projected yield of 4.7% per annum. But perhaps you might be wondering, why not just buy the funds separately? That way, you'll get to avoid the advisory fee of 0.05%. Here's why. 1. You will notice that both funds have the word Class B at the back. Class B funds are actually institutional grade funds, which are reserved for institutions to invest in, and they have a minimum initial investment of $1 million. So if you wish to invest in these funds, you would have to go for Class A funds, which have higher annual management fees and require an initial investment of 1,000 Singapore dollars. But with Cash Plus Xtra, retail investors like you and me will get to invest in Class B institutional grade funds with as little as 1 SGD or enjoying a lower annual management fee. Second, by investing in the portfolio directly, you will get the additional benefit of the portfolio being managed by a portfolio manager. For example, depending on market conditions, they can readjust the allocation to either get a better yield or protect your capital. Or, here's another example that they gave. They can also introduce another fund into the portfolio in order to get better growth opportunities. Next, let's talk about the fees. UOBAM Invest charges an advisory fee of 0.05% per annum when compared to other platforms which are all charging a 0.1% to 0.15% fee and above. The Cash Plus Xtra portfolio is currently the cheapest portfolio. This is good because it lets you keep more of the return. So who is suitable to invest in the Cash Plus Xtra portfolio? Remember that this fund is an investment and not a savings account, yeah? So there's still a small risk of it going down in the short term. That's why this portfolio has a recommended investment horizon of at least 1 year. This means that it might be suitable for, say, someone who's saving up for something in the short term, like a holiday trip next year or your new house renovation in 2 years' time. By parking your funds in the portfolio, you will get to enjoy the benefits of having an investment portfolio with potential returns on it. So now, you get to earn some extra money to, I don't know, sit on an elephant for your next Bangkok trip, or buy an extra Zhao Cai Mao for your new house. Besides that, it's also good for someone who doesn't want to jump through all those extra hoops in those high-yield savings accounts in order to earn their interest. Plus, this fund is fairly liquid as you can withdraw and get back your money within 3 to 5 business days. It can also be a good place to park and grow your emergency funds. Alright, if you are interested to invest in the fund, here's how easy to invest in it. First, in the app, tap on Add Portfolio, then scroll down till you see Cash Plus Xtra. Tap Get Started, then tap Next till you see the portfolio page. After that, you can just tap on Top Up to start investing into the portfolio. You can fund the portfolio via several methods, such as eGiro, PayNow, bank transfer, bill payments. But the easiest way is to fund via PayNow. You can start investing with as little as 1 Singapore dollars. Tap Review, review your deposit request, and if everything is okay, tap Submit. Download this PayNow QR code. Head over to your bank app, tap Scan and Pay, look for the QR code that you saved just now, then just transfer your money over. And tada! Your accounts will be funded and you will start earning a return on your funds within 1 to 3 business days. As for the sign-up rewards, if you are new to UOBAM Invest, you can sign up using my link down below and receive a $10 credit when you sign up and make a top-up of any amount to your UOBAM Invest accounts. Anyway, that was a quick review of the Cash Plus Xtra portfolio by UOBAM Invest. Hopefully, you found it useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.